now we're gonna talk about the cash flows from investing activities, where we first have to check the proceeds on sale of the asset. Here we have the vehicle only, the purchase of vehicle and the purchase of land, and the increase or decrease in investment. Let's check about the proceeds on the sale of vehicles. When it comes to the proceeds on sale of the vehicle, we're gonna focus on the asset that was sold. We have an asset here which was sold at carrying value. What's the other thing? Okay, need this one. Okay, looking at the fixed assets. Okay, let's check. But during the current financial year, a delivery vehicle with the cost price of 180,000 and accumulated depreciation of 165,000 was sold at a profit. Let's not forget that the profit was, this is the profit. The profit on the sale of asset was 12,000. So basically, in relation with the asset disposal, let's check. The of asset disposal says on the debit side, focusing, we must record the cost. This is a vehicle at the cost price of 180,000. We have the accumulated depreciation, which is the second part. Accumulated depreciation of how much? 165,000. The thing that we're looking for here is the manner, the way asset determination cutting. When we have the profit, it must be on this side, so that when we draw up a ledger account for the profit on the sale of this asset, the recording will be on the credit side, since it's an income account. Now the profit was 12,000. The manner, it can either be, since we have the profit, it can either be the bank or the debtors control. Okay, let's check. If we take 180,000, we add 12,000, and then we subtract 165,000. The amount that we received after selling this asset is 27,000. So coming to the proceeds, on the sale of the vehicle, we're gonna have 27,000 inflow. Reason being, we are receiving cash. It can either be written in this way: the cost 180,000 plus 12,000 of the profit minus 165,000. We will still get 27,000 that we received in the bank actually. So there is it. We deal with that part. Now if we have to focus on the purchase of the vehicles, it can be found in two ways here, two-sided. We have where are the vehicles, the assets. Okay, we have the carrying values here. We have the carrying values and the cost. We can use the carrying value or we can use the cost price. Let's look at our PPE. I've drawn a little bit portion of PPE there. Let's not forget, for you to get the CV at the end, you can either take the CV at the beginning, you add together with the direct, the addition add cost, you subtract disposal carrying value, you subtract depreciation, you will get the CV at the end. Let's test here. They give us the carrying amount at the end is 425,000, and the carrying amount at the beginning is 320,000. Depreciation for this for the assets is 90,000. Here it was indicated. We have depreciation of 90,000. Let's into the bracket. The disposal at carrying value, we have an asset that we sold. Is this one? The cost was 180,000. The depreciation was, the accumulated depreciation was 165,000. For us to get the carrying value, let's not forget is the cost price minus the accumulated. Let's check. 180,000 minus 165,000. We're getting 15,000 as carrying value. 15,000 here. We're looking for the cost, which is the purchasing price that we're looking for here. Purchase of the vehicle. Let's test. If we take, let's not forget what carrying value at the beginning plus this one minus is this one. So now we have the carrying value at the end. Let's work backwards. Wherever you see a minus, you add so that we can get the balance here. If we take 425,000, we subtract, we add back 90,000 of depreciation, we add disposal at carrying value, we subtract the accumulated depreciation at the beginning, we will get 210,000 as our cost during the year. Or we can do it in another method. Let's see. We have cost at the beginning, we have cost at the end. We know the cost of the asset that we sold. Let's not forget what cost. For you to get cost at the end. Focus on me. You're gonna take cost at the beginning. You add additions, add cost, and then from there you subtract cost of the asset sold. Ne? Let's check. Cost at the beginning is this one. If you take 510,000, let's not forget we're looking for this amount. Ne? We're looking for this one. We're looking for additions and add cost. We don't have it. Ne? If you take cost at the beginning, 510,000, you subtract cost at the end, 540,000, and again you also, let me see, we're looking for this for additions and cost during the year. It must be cost at the beginning plus additions and cost minus cost of the asset that you sold. Okay, and then again you subtract the cost of the asset that you sold. Let me see if I'm not making a mistake. You will still get 210,000. You see, cost at the beginning. Let's not forget, if you take cost at the beginning plus cost during the year minus cost of the asset that you sold, you will get cost at the end, which is 540,000. Now you have cost at the end, you have cost at the beginning, you have cost of the asset that you sold. If you take at the beginning, you subtract the rest, you will get 210,000. Or you take cost at the end, you add, if you take cost at the end 540,000, you add an asset that you sold. Remember, on the other method is minus. Now we're looking with the reversal. If you add back this one, you will get 720,000, and then you subtract cost at the beginning, 510,000. You will still get 210,000. That's how you get it. So the purchase of vehicle, the business is purchasing, which means the money is going out. The money that was out was 210,000 for the asset that they sold. Ne? Okay, going to the land and buildings. Yeah, going to the land and buildings. Let's see. The land and buildings, they were 800,000 at the beginning. At the end is 1.2 million. Ne? But then we have what we call the revaluation surplus. Revaluation surplus is 100,000. So for this one, it's simple. Just take. Let me see. Okay, let me just write it here. At the beginning, they were 800,000. You add the revaluation surplus since it's an income. You add 100,000. You subtract the one at the end. You will see. You will get the amount of money that you've taken out to purchase more land and buildings. Where are they? Okay, this one. You subtract 1.2 million. You're gonna get how much? Let's see. 900. Oh, negative. It will be 300,000. This is exactly what we're looking for here. So for the purchase of land and buildings, we have negative 300,000. Let's not forget 300,000. Yeah. Where you see the proceeds, it has to be an income. The purchase has to be an expense since the business is taking out money. Let's test for increase or decrease in investment. For investment property, at the beginning we had no investment. Let me check it. Okay. Okay, done with this part, done this one. Property. Investment is it? Oh yeah. Let's see for investment property. What can I do with the calculation? At the beginning we had nothing. It was zero, ne? There is it. Investment at fair value. It was zero. At the end is 600,000, ne? Which means you have to subtract 600,000, and then you add back that income of the interest income. You got interest from this, which means it was included here. We have to take it out. You add back. How much is the income? Investment income. The investment income was 20,000. You add back 20,000 here. You're gonna have a negative 580,000. Now, for the investing activities, we are done. It's only this ones. you're gonna have 27,000 minus 210,000 minus 300,000, then minus 580,000. It will be let me see, we have 300,000 for extension of buildings, we have negative 580,000 for investing property. What does it not include? We have the profit, the proceeds on sale of the thing, 27,000. Yeah, the balance here will be an outflow of 106,000, 1,063,000 is basically done with the investing activities. We now have to focus on financing activities. This is why we're talking about the shares and the long-term loan. Cash flows from financing activities. Okay. When we take a look at the shares, we're looking for the shares issued for the current year. Let me see. Where is it? Where is the format? I want the format again. Yeah, there is it. We're looking for proceeds on the issue of shares, redemption or the buyback shares, repayment of a loan or the proceeds on loan. Okay. Let me start with the loan because it's the easiest one. Going to the loan. At the beginning you had 529,900. At the end you have 1,480,000. Let's check. Let's talk about an increase or decrease in long-term loan. Let's see. At the beginning it was 500 and where is it? At the beginning the long-term loans were how much? They were 529,900. You subtract 1,480,000. This is not a repayment. If you check, you obtained more loan. It's not a repayment. You can either take this one, subtract this one, but the answer here has to be an inflow, not an outflow. Please. What's my calculator? 529,900. We subtract 1,480,123. We are getting 950. Yeah. So coming to creditors, I said the opening has to be negative and the closing has to be positive. By the way, we are applying this method now. Here they say your less opening balance of creditors and then you add the closing balance. But now I'm using the simple method, increase or decrease. According to the question paper, we don't have any accrued expense, we don't have any income received in advance, we don't have any prepaid expense. So it's out. So we will now have to calculate for this is cash paid to suppliers and customers. Wherever we see a minus, we subtract. Wherever we see a positive number, we add. Starting from the net profit before tax, we have 238,123 minus 2.7 million. Yeah, and then we add 20,000. Minus 20,000 of the less interest or the interest. 20,000, man. Okay, then we add back 95,000. We add 90,000 of depreciation. We less 12,000. We add 40,100. We less 4.2. Let me see. What did we miss? What's that method? I want to check something. Seems like I missed something here. Oh, there is something which is in short here. We must have rent income here. Rent income here. Yeah, I see. What is the other method? You see, this is reconciliation. It has rent income. We must have rent income here. Let me see. Where is it now? Stop, my bad. Stop. Stop, my bad. Hey, capiro stupid, my bad.